Have you been financially impacted by COVID-19? Are you considering not paying your mortgage?
But they're offering a forbearance.
You better think twice. Hello everybody, my name is Barry Horvath and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us, and hope everybody is staying safe during these unprecedented times, and where we're all locked down now.
It's pretty crazy, isn't it? The world has changed as we know it. It's unbelievable. Again.
You know,
yeah.
this is a couple of times in our lifetimes, a lot of people's lifetimes actually, when you go back to even the elderly, you know, Pearl Harbor and then 9/11 and now this. These are things that are globally impacting
it's not just
the world.
us.
It's not just Florida. It's not just the industry. It's the world.
I agree.
So it's definitely odd. Well, we certainly hope and pray that you're all staying safe out there, and we thank you for joining us today.
Yeah, since you have nothing else to do, you got time to watch us from home, right? Or wherever you are. So
we always try and bring you some interesting information and up-to-the-minute things. And one of the things we've been hearing a lot about lately is the forbearances that are out there because people are impacted by this.
Let's talk about what exactly is a forbearance. So you've been financially impacted. You know, our unemployment rates are super high right now. We hit over 20%, and they're saying that these numbers may not even be accurate. They may be on the low side. You got, you know, a cutback in hours in other areas. So the financial stranglehold on some people is really starting to set in because they're starting to go through savings now. You know, we're going on, what, month 2 of this going on? And I believe it's going to get worse right now before it's going to get better, sadly. So, you know, you hear all this stuff about forbearance. What's a forbearance? Well, a forbearance is basically, it's not a forgiveness. So
no,
what does that
not at
mean?
all.
You know, the bills keep coming, and you have to make some hard decisions to protect your family, protect your home.
Asset, your biggest asset is your home.
Your
so
home.
we want to talk a little bit about doing that. There's a lot of scammers that are out there too, so we wanted to warn you about things like that. The only person who would be allowed to give you a forbearance anyway is your existing servicer, which is the person you make your mortgage payments to, just so that you know that. The person who you actually mail the mortgage payment to or do it online, they're the only ones that can give it to you. And do not just stop making your mortgage payments just because the government said, oh, forbearances are being offered.
Before we go into why you should or should not do this, let's explain what a forbearance is.
Okay.
Can you do that simply?
So you mean the forbearance math, or do you want to?
No.
All right, go ahead.
Basically, forbearance is you go to your lender or servicer and you come up with an agreement that says, I'm going to not pay my mortgage for X amount of time. And right now, under the CARES Act that's in place, you can actually go up to 180 days.
6 months. Without
paying your mortgage. And there is a provision in there that you may extend that by another 180 days. So it is not, I repeat, it is not a forgiveness of the debt. You're basically delaying that debt. The interest is still going to accumulate. And there's different ways. You need to check with your servicer on how you're going to have to pay back that at some point. You're not getting out of the debt. I want to be very clear about that. And every lender and servicer may have different provisions. Are they going to tack it on the end? Are they going to want it in a lump sum? Are they going to increase your monthly payment? So it could,
and that is up to the individual servicer. Keep in mind, like Barry said, it is not a forgiveness of debt. So it is absolutely still going to be owed, and you need to prepare for that. So although the government is saying under the CARES Act that you're allowed 180 days, it's up to the individual servicer. The servicer it's not just a carte blanche thing and you get it automatically. You do have to communicate in depth with your servicer, and you want to ask those really important questions at the end of this. So let's say they give you a 6-month, that's fine. At the end of that 6 months, what happens then? How does it get paid back? Because keep in mind, if we're talking from now, what happens in about 6 months? Real estate taxes are due. Well, if you're not making any payments for 6 months, that means there's nothing going into your tax escrow account, right? So the real estate taxes are due in November. The lender is going to pay those for you, but now you have a negative in your escrow account too. So these are all of the things that you need to really communicate well.
It could really be a multiplier on you.
It is.
A
It is.
domino effect.
And that's what we wanted to talk to you guys about. It might not be the best option. So we wanted to do some really quick little example that was handed down to us by our corporate. Little example of the forbearance, and let's do some really quick forbearance math here.
I love when you do math, DeLynn.
I know.
I need to.
Well, actually, you're going to do this part.
Okay.
Look, he's got to clean his glasses first. All right. Go ahead. Do the part that says B.
B. So I thought you were D. I'm B. You're D.
Yeah, I'm D. I did my part. It's your
did
time.
you? All right. So mom and dad have a mortgage. It's currently $1,500 a month. Dad gets laid off, calls the servicer, and he asks for a forbearance.
The servicer on the phone says, sure, he can get 6 months off from paying the mortgage. 7 months later, Dad is finally back to work, but he hasn't been able to save up any money during the forbearance. And when the forbearance is lifted at the end of the 6 months, the lender says to him, the servicer says to him, that'll be $9,000 plus the $1,500 for the current month, which you now owe, which is $10,500.
Now, this is where Dad almost passes out right here, right now.
Right.
And he says, why?
And the servicer's answer is that is the 6 months of forbearance payments plus the current month.
So Dad says, I can't do that. Can we work something out?
And the servicer says, sure, we can spread out that $9,000 over the next 12 months. How about that?
I can't do that. Can we work something out?
The next B. You can tell
Really
we
good at
rehearsed.
role playing. I know. All right.
You're doing a good dad.
Dad. Oh my God, I can't afford that. I know.
No, the line before that.
Oh, I missed a B.
You did.
I can't do that. Can
Hold
we
on.
work something out? I got a lot of B's.
The servicer says, sure, we'll spread that $9,000 out over the next 12 months. Dad
Says, phew, okay, what will that look like? I'm sorry.
The servicer says that'll be $2,250 a month over the next 12 months. $2,250. How's that?
OMG, I can't do that.
Sorry. So sorry.
Can I refinance?
Unfortunately, no. Because your loan went into forbearance, you are not eligible for a refinance.
Oh, what can I do? What can I do? What can I do? Yeah, so that's like, you know what?
That's it, right there.
So, and that's important because I know they tout these forbearance. They say, we're not going to hit your credit.
Right.
And they're not going to hit your credit because under the CARES Act, they're not allowed to ding your credit for it.
Right.
But what they don't tell you is that it can affect you from getting a mortgage again in the future. In fact, we have to have a borrower sign a document now that says they're not in a forbearance agreement
Right.
before you
On
can
any
even
property.
proceed.
On
So
any property.
Yeah, so if you are in forbearance or plan to be, you may lock yourself out of buying or refinancing a house for the foreseeable future,
And
just like you had a foreclosure in the past.
Right. And foreseeable future is about all we can say right now because none of us know how this is going to play out, quite frankly. Many of us who lived through the 2008 to 2012 era when there was a lot of short sales, a lot of foreclosures and things like that, and a lot of forbearances going on where people were trying to hold on to their houses and they got forbearance agreements from their lenders. And every lender, if you guys remember correctly, and maybe you guys don't know, but every lender was reporting it differently.
Yes.
Some of them were reporting it on your credit report as a forbearance, which was a negative thing. Some of them were just reporting you as on time or current, or some of them just stop reporting. So every lender did it differently. We don't know how this is going to play out. We don't know how the government is going to, and if the government is going to mandate to all of the lenders how they will be required to report these on people's credit reports. Just like back in, the 2010 era and stuff, we're not sure. We're not sure how this is going to play out. The one thing that we do want, last resort, do not do a forbearance on your mortgage if at all possible. If you have a way of making your payments, make them. That is absolutely positively the
right
biggest
now,
thing.
They're not going to ask for the normal financials like when you ask a forbearance, because they don't have to under the CARES Act. But you know what, I know we've not talked about this at all, but I want you to think back, because we both lived through that 2008, 2009 time where people were struggling, and we saw a lot of these forbearances, and we haven't even talked about that. Maybe whatever agreement you have with that servicer, they might tell you, well, at the end, we'll spread it out, and you're thinking, oh, that's good, it's better than foreclosure, but the servicing rights still can be sold during. There's nothing that says a servicer cannot sell your loan to someone else to service it. And I'm going to tell you, I may be wrong, take me out and shoot me, but those terms, unless you have something ironclad in writing, they might tell you, yeah, we'll spread it out over 6 months. All of a sudden, the servicing rights are sold, and you get the new servicer, and they say, no, we take a lump sum to get caught back up on that payment. Then what are you going to do? And
actually, that did happen. That did happen a number of years ago, a few years back, when they did the hurricane.
Yes.
Remember, there was like a 3-month thing, and people were not made, and people, exactly what you're saying, in the middle of that, their servicing was sold. Well, the new servicer did not sign that agreement and did not agree to that agreement, and they're like, no, we're not honoring that agreement. You need to catch it up right now.
Yes.
Or they had a whole new different set of terms and such. So that did happen with one of my clients, actually. And again, they came to me and said, can I refinance? I don't know what to do. I have this 3 months that they now want. And unfortunately, because they were already in a forbearance agreement, I could not do it. Fannie Mae, Freddie Mac, FHA, VA, USDA, all of the mortgage people, all of the agencies are all on the same page with that. They all look at a forbearance. It's not going to be a good thing for future financing.
And I know you already touched on this, but when this is happening and people are in a financial crisis, the scammers are going to be out. So you're going to start getting phone calls, and I know you said only deal with your servicer, but you're going to get third parties that are going to offer a service that says, we can help you save your house, or,
send us your payment, and, we will make sure, we will do all of the fighting for you, and, get your rights protected.
You can get it done on your own, but the question is that the best decision for you?
Right.
Personally, me, I would work with credit card companies first, student loan companies first, car payments first, before I started, messing with that mortgage and going to forbearance agreement.
And a lot of those are offering a similar thing, a relief, so to speak, of having to make payments. Absolutely do those first. I pay my cards online like everybody does, and like the first thing that pops up is, oh, are you affected by COVID-19? We can help with financial assistance, things like that. So it's the first thing that pops up. Go there first, because again, if they're offering it, and if you get it in writing saying that you don't have to make any payments, let's say for 4 months or something like that on your credit card or on your car loan or whatever, if they put it in writing for you, do that first, because normally when they do that, and ask this question, it will not affect your credit. It will not affect your credit at all. Just like with the mortgage, it's not going to affect your score, but it is absolutely going to affect your refinancing possibilities on a mortgage, but not on a car. A car is different. A credit card company is different. So a student loan company is different. Those are the ones I would go to first.
I wonder if they'll freeze your credit card if you do a forbearance on it and can't use it any further. Something to consider, too.
Yeah.
I bet they would.
They probably would.
I bet they would.
Yep.
But still, I think that's a better option.
I
than-
do.
Yeah.
And then go to your car, go to your car loan place or your student loan place and things like that, your furniture, if you have a furniture loan or whatever.
Right, see
Definitely
if
go to
they
those
can-
loan companies first and ask them about, some sort of a forbearance or a relief for so many
I
months.
almost hate the fact that there's so much publicity going on about, this CARES Act, and you don't have to pay your mortgage, because people need to be educated about the possible repercussions of doing this.
Yes. And that's what those people are not being told.
No, they're not. We're here to tell you the truth and what can
Right.
happen on the back end.
I know.
So clearly, the entire country is now scrambling. They're applying for these, PPP loans.
Right.
They're applying for all these, the SBA loans to save their business. Unemployment, they're applying for. And now we have statistics now that's showing you that mortgage servicing companies are next in line. They're getting bombarded right now. I mean, it's crazy.
The number of service call requests has gone up unbelievably.
Yeah, it's crazy how much it's gone. You know what's so funny? We actually have numbers on that. It's fun to
course we
look
have
at, but it's
numbers on
scary.
that.
So from March 2nd to
April
April
1st.
1st.
1 month.
Yeah, 1 month. So the number of calls, the largest one right now is with Ginnie Mae.
The forbearance, the
Yeah, the
number
forbearance.
of loans in forbearance.
It's gone from 0.19 to 4.25%. So what does that mean?
0.19.
Yeah, 0.19. That means there's a huge amount of people with those government-insured loans.
Right.
That the forbearance agreements are so much higher that people are filing for them.
Which is your FHA loans and your VA loans, because they had the smallest down payment that went in.
And it's
So those are
usually-
higher, riskier loans.
They are, and it's more of the marginal type borrowers. So what does that mean? Why do you think that credit score requirements have gone up?
Right.
We used to
On
be
the
able,
FHA and VA
we used to be
loans.
able to do down to a 580. Okay, we're at 640. My gut tells me the industry is going to settle at somewhere around 660, and it's not just us; it's nationwide.
Right.
And that's reality, because it's supply and demand. If you have this much money to give out, who do you want to give it to? The people that have a 660 score or above, or the people below?
Right.
Well, and that's why rates are fluctuating so much as well.
It's definitely getting absolutely crazy out there.
And people think, oh, rates are at zero. Well, they're not, but they're good. I mean, they're settling
know.
down again.
But that's one of the reasons why the industry is getting so, because of the delinquencies that are starting to come and the forbearances that are starting to obviously crop up, and even in the conventional. That's just in the government loans, the FHA and the VA and the USDA loans. In the conventional loans, even those that had large down payments or whatever, even those, it has grown. The number of loans currently in forbearance went from, inside of 30 days, from March 1st until April 1st, it went from 0.25% up to 2.66%. That is a lot.
Yes, yes.
That is a huge growth. So there's already, and we're barely we're just over 30 days into this whole thing, and they say we haven't even hit the peak yet, so, which means it's only going to get worse. If they're experiencing those kinds of forbearances, are they going to be lending out new money? Yes, but they're going to be lending it out very conservatively.
Yep.
So they're going to
be more stringent.
They're
the
going to be more
guidelines.
stricter. So
Yeah.
be patient. We do want people to still buy homes and stuff, because obviously
And
people
they
need
are.
that.
They are.
And they are. We're definitely doing closings, and we're getting new contracts in every day. So there's definitely things that are out there, but just be understanding that it's going to take a little bit longer, and they're going to be a little bit stricter on things.
My advice to you is, if you are thinking of buying a home, which it's a great time because interest rates are low.
Yes.
And I think inventory is going to be more readily available here very shortly, and you're already seeing it. Make sure you get your credit run. Get with a credit person. If you're on that low FHA score, let's try to get you to a conventional, because conventional is not being impacted. You might need a little more money down, so maybe it's the time to save a little bit. But I think it makes sense. And if you look right now, it's still a buyer. It's a buying opportunity with
It
the
is.
rates where they are. It really is, because When was the last time you were in the threes? When you've been in this industry a long time. When did you
I know.
ever remember
I'm coming
that?
up on my 40-year anniversary,
Oh,
you know.
stop it.
I know. Can
Stop
you believe
it.
that? I know. 1980 I started. So they've never, ever. I think the lowest they ever got, and it was for about a day and a half,
Right.
was it like August of 2016, I think it was, or something? They dipped down for about a day into the threes, and then they went back to the fours. And they, for the most part, they've been there up until just this last month, where the rates were going absolutely crazy.
I've heard some walk-on-water people, low loan-to-values, got down in the twos.
Yes.
Some are in threes, some are still in the fours.
Again,
but
that
it might
very
be a
short-
might be a time to consider refinancing. But, the other thing is get pre-qualified, because right now, if you don't like the guidelines, wait a minute. Like we're working with people harder now to make sure that things don't change
Yes.
for them.
And letting them know, we all feel, the entire industry feels that this is absolutely a short.
It's temporary.
It's temporary. We're all going to get by this. We're all going to get through this. As they all say, we're going to get through it together. So by all means, get pre-approved right now. And if you're not in any particular hurry to close immediately, you know what? Sometime in the next 30 to 60 days, things are going to start to settle down. As soon as we get over, the curve that they all talk about, I think as soon as people get over that curve, people will be able to breathe a little bit better, and I think the markets will stabilize. And it might take a little while before they change the guidelines back to where they used to be, but I don't think it's going to be really long term. I think it's definitely going to be, quote unquote, back to normal prior to the end of the year, don't you?
So be ready, is what
Yeah,
I'd say.
be ready.
The one thing, like this week, I know changed in the last week is non-essential business. If you work for one, you can't get funding right now.
Right.
So keep that in mind, because those numbers of forbearance, those people in those industry are more likely to lose their income right now.
The other thing, you bring up a really good point. The other thing, just so that we can mention it to you as well, if you are in one of the, even if you are in one of the essential businesses, but let's say your hours got cut, you used to work 40 hours and now you're down to 25 hours, even if you qualify at that 25 hours, still can't do the loan. Because you were cut once for hours, they're not sure, are you going to get cut again?
Right.
So even if you qualify. So like we said, it's definitely a little bit stricter now, a little bit harder, but by all means, don't stop. The other, the positive thing about this, if you are in the market to buy a house right now, definitely talk to somebody, because there's a lot of people right now who kind of are sitting off to the side, which means, how we used to go to a house and there was like 5 other offers?
Right. Now you can't
might be the only one now.
Yeah, now you can't even get in it.
But you know what? But if you looked at it virtually and you want to buy it, you
Right.
might be the only offer.
Yeah.
Right?
So it could be definitely a buying
It could
opportunity.
definitely be a plus for buyers right now. If you're pre-approved and if you're golden, talk to your loan originator, or give us a call. We're happy to talk to you and pre-qualify you. A little plug right there.
And we keep up with the guidelines every day, and they are changing. So what you heard yesterday may not apply to today.
Right. They're changing every day. We get new updates at 9 and 3 every single day.
You know what? I know we talk about this whole virus thing, and it's impacted all of us in one way. I'd like to talk about something really positive that I've witnessed, and I know you have too. In all the bad in the world, it brings out good. And good for us right now is we're still going to do our lunch and learns, and we're doing them via Zoom now. So we'll be able to connect with more people in the real estate industry. They still will be on the second Tuesday of the month at 11:30, just
Same
like normal.
time.
Yeah, and we're
Same
going to
bat
have
time.
we're going to
New
have
bat channel.
we're going to have great information on it, keeping you up to date on what's going on in the industry. We're going to share ideas. It's going to be amazing. But that's a positive. The other positive thing I've seen is, when's the last time you walked down the street, drive through a neighborhood, and seen so many families out together? Kids shooting basketballs,
Yes.
people walking, dogs out walking, people riding their bicycle. Bicycle sales have to be booming right now. I was on the
See,
trail.
some industries are going way up.
And you know what? There will be, the new normal. There will be a shift in the economy. We may be down in hospitality, but there'll be other industries that pick up, like Amazon, shipping, online business. I saw like Walmart's hiring, big time. Sam's Club's hiring. Publix is hiring. So there's opportunities out there. They're just different. And none of us like change. I hate it. But there's so many positives that'll come. We're going to learn and grow from this.
And you know what? And I think from spiritually, I think that my personal opinion, this is a big come to Jesus meeting. God is saying, hey.
Come on.
And I think that there's going to be a lot of people who are, humbled by all of this.
Sure.
And definitely their outlook on life and family and what's important is changing, and that's good. I think that that's something that God wants us to look at.
We had no opening day for baseball. We've had no basketball.
Which is important in your world.
I mean, who knows what's going to happen for football? Hopefully it's cleared up by then. And these athletes are out there, and, what are they, it's going to affect them too, because if it doesn't keep going, it's going to be...
Well, they canceled the Olympics.
Yeah, I mean, that's just...
Right?
Yeah, think about it,
That's never happened.
No. Stay positive and stay focused, and we're going to get through this. It's all going to be good. And we'll keep you on top of all the changes in our industry.
Right.
One other thing I saw was the real estate or the appraiser board is now telling appraisers to not go into a home when they do an appraisal if someone is there.
Yes.
And they're recommending that they open up their windows before they even go in. So another change.
So,
crazy.
Right. And not every appraiser, this is just a recommendation by the appraisal board, so not every appraiser will follow that. I actually just told a client that, and they were like, oh, we've got an infant. But it's to protect both the appraiser and the homeowner,
Yes.
Even if they're just stepping outside onto the front lawn, right, while the appraiser goes in to do their appraisal, it protects both of them.
I know when I go see my mom, mom and dad or anybody goes there, they go on the back porch.
See?
Yeah,
That's
we got to
good.
keep them safe.
Let's all be safe, Let's just be safe. It's important.
Yeah. So
we all want to be on the other side.
Yeah. So anyway, anything else we want to share? Been a great show.
But we would love you guys sharing with us. So there's a lot of really funny memes going on out there. Send them our way. We'll be happy to show them. We'll put them on air for you, because there are some really funny things that are going on out there, and we all need a laugh now and then,
we do.
right? Yes. We all need a donut and we all need a laugh. That's
all we need in that order, right?
That works.
Hey, so thanks for watching our show. Share it. We're all over social media. Forward this email if you got it. Like it, love it. Tell your friends about us. We're pretty cool. We're fun to watch.
We are. And we're always here for questions, so feel free to reach out at any time.
Yeah.
We are today and every day.
Moving forward.
We'll see everybody next week.
Have a great week, everybody.
Bye-bye.